Hey guys, welcome to Cryptocurrency Blockchain News, your site for aggregated news of the day in the cryptocurrency and blockchain world. So let's look at the market caps of the day. As you can see, we're rounding out the top 10. We've got the usual suspects: Bitcoin, Ethereum, Ripple, Bitcoin Cash, EOS, Litecoin, Cardano, Stellar, Tron, and IOTA. But check out that. Look at Tron at number 9. Moving up. Moving up in the world. So Tron, they've got their. We did the video, and actually, I'll put a link to that video in this video. We've got a link to the video. They're moving to their main net coming up, so they're going to be in their main net status. That's going to be awesome. That's coming up, and in order to hold your Tron, you need to put it on an exchange. I put the list of exchanges that you can hold your Tron on a video yesterday. So just go back to that Tron video and your Tron will be safe, but you have to do it before the mainnet launch. Okay, so make sure you do that. Keep your money right. All right, so check out this. I thought this was interesting today. eToro came out with this survey. They've been conducting it for just over a year. And this is by AMB Crypto. eToro survey shows Ripple reigns king in investment and profitability. A survey released by social trading and brokerage company eToro shows investor interest levels in cryptocurrencies. It's a very interesting survey. I tried to look for it on their site, couldn't find it. But it's got to be somewhere. So I'll dig around more. Maybe I'll bring it out tomorrow or something. The survey also mentions the percentage of investors' occupations and the most profitable coins over the last year. The survey collected data in the time frame of from March 2017 to February of this year, 2018. This is a significant time to collect the data as it captures the Bitcoin boom over the month of January of this year. So actually, I highlighted just a little bit of this video, this article, but the whole thing is worth reading. So I'm just going to read it. Ripple is the most traded coin across 4 age groups of 18 to 23, 24 to 35, 36 to 54, and 55 and over. Bitcoin and Ethereum follow behind as trading mainstays for all 4 groups. It is probable that their high price deterred investors from the coins, especially Bitcoin, as seen by its decreased popularity in the 25 to 35 and 36 to 54 range. So that makes sense. I mean, Bitcoin being like what do we at now? Eight grand and change. Little 24-year-old kid coming out of college can't afford that, and up to 35, is probably worrying about changing some diapers and stuff rather than investing right now. So that makes sense. And the 36 to 55 to 54 range, a little interesting to me. I would assume that by the time you're in your 40s, you've made some cash and you can now afford to invest, but that's how it goes. After Litecoin running in the middle of the pack at 4th, Bitcoin Cash, Ethereum, and Dash fight for the 5th, 6th, and 7th positions among the age groups. Their status as altcoins and forks of popular coins seem to keep them relevant. So here's the chart itself, the age ranges. Cryptocurrency investors have a crypto to invest in, but what effect does age have on where they put their money? We've studied the popularity of different cryptocurrencies across 4 age groups, and so check out that chart there. It's very interesting, very informative, and it just tells you the age groups and where they invest their money. Stellar and Neo round out the pack at last place in every age group, with Stellar in 8th and Neo in 9th. In the investors' experience level, this is interesting as well. You can see the majority so novice is green, intermediate is orange, advanced is blue. You can see most are novice investors in this crypto world, right? You might be invested in other stuff and now realize a new investment opportunity, and that's why you came here, like myself. I'm a Forex trader, but I got turned on to the crypto world, and here I am participating in it as well. So we've got the survey results show that a majority of investors are novices in the crypto trading field. Close to 80% of investors are inexperienced in the field, with 11% intermediate and 7% with advanced knowledge in the field. A majority of investors work in, so this is interesting. So this shows where the people come from, like kind of what their occupations are. Well, exactly what their occupations are. A majority of investors work in the computer or IT-based occupations. Duh, since these are networks, computer networks, in a sense. That makes sense, according to the survey. The majority is rounded out by those who trade crypto as their occupation, followed by sales, students, and those working in the finance sector. Makes sense. Finance sector, students looking to pay rent. Sales, interesting. I don't know what those guys are about, but they're a rowdy bunch. All right. So the minority of the traders are occupied in the arts, real estate, and are retired. Other significant jobs traders are involved in include education, healthcare, architecture, and tourism. There's a great disparity in gender. Check this out, guys. So I know I can say guys, and I'm not going to get, well, why are you not including the ladies? Man, ladies, you're not around. Come hang out with us, guys. We're looking to hang. Anyway, we got enough of you here in South Beach. Anyways, seriously, though. There's a great disparity in gender, with 91% of traders being male. Only a measly 8.5% of investors are female. Women are proportionally more likely to invest in Ripple, with 2% of women by proportion favoring it. NEO has a likelihood of females investing below 1%, with Ethereum Classic being favored completely by men at around 1%. All right. Average profitability. So you should come to this site and check this shit out, for yourself. I mean, you could just rewind this video and check this shit out from here, but whatever. Blah, blah, blah. You can see Ripple's made the money. What's that right there? Looks like Ethereum, Litecoin, Bitcoin, blah, 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 all the way down to Bitcoin Cash. Actually lost you money if you invested in, what's his name, Robert Ver or something? The Bitcoin Cash guy. Anyway, Ripple beats the competition handily in profitability, leading by a margin of 2% for a total of 8% average profitability. Now, I got a bunch of buddies. I'm a Forex trader. And so I have a bunch of guys that are in the markets. A bunch of friends. All my friends are in the markets, right? So options guys, stock guys, and me, like guys like me, Forex, the real money. But anyway, and so a 5% return on investment for stock guys over a year is a big deal. That's huge to these guys. Like, they think that is something so amazing that they return 5%, 6% of investment, 7%. Oh my gosh. And I mean, if you return 9%, you are, that's what they believe, right? Well, that's how it works in that world, in the stock world. And, so 8% average profitability, if you just bought and held, if you just bought and held, man, you're pretty much what's called a star trader, right? A star trader. Those are the big guys on Wall Street. Anyway, notably, XRP, Ripple, was at a value of 0.005 cents at the time the data started to be collected in 2017. By the time it ended in 2018, February, it was a humongous 23,100% growth. Imagine that in the stock market. Like, my gosh. With a value of $1.16. Ethereum is second, blah, blah, blah. You can read that at your own. Litecoin is at only half of Ethereum with 3% return, and so on and so forth. So, interesting little article here by these guys here at eToro. If you can, I'd go check it out. Like I said, I looked for it a little bit, tried to find it. I couldn't find the article these guys are talking about, but it's obviously there somewhere, so check it out. Now, what do we got here? Oh, Bitcoin will reach highs. Custody solution. When we have a custody solution, says Michael Novogratz. And the reason I'm bringing up this article is that institutional investors want to come into this market, but that's their one of the major problems that they're having right now is custody. I mean, guys don't want to have, or let's say fund managers don't want to have, a gazillion Ripple on some little wallet, right? Like some, I have my stuff. What's that? That Nano Ledger S thing, right? That's why I have mine, but I don't have a gazillion. These guys are going to have millions, possibly billions of dollars worth. They don't want it on that kind of little stuff. So what they want are custody solutions. In other words, they want to have actually companies that they give their tokens to that hold it for them. That's a big deal in the institutional investor aspect of the cryptocurrency market right now. The reason a lot of these guys aren't getting in, they want to have custody solutions. They don't want to go to Binance and have to hold it on Binance. What if they get hacked? Well, they're responsible for their customers' money now, right? Do you do due diligence and blah, blah, blah? Oh my gosh, you get sued all up the yuha, right? And so, yeah, that's a big deal. And so let's read on a little bit here. Michael Novogratz went on Fox Business yesterday to talk about the Bloomberg Galaxy Crypto Index. He also spoke about his past investing in Bitcoin and his opinion for the future. The index, and so you see the index was created in conjunction with Bloomberg. So big news, big news. Remember, Bloomberg has Bitcoin, Bitcoin Cash, Litecoin, and Ethereum on their Bloomberg terminals. If you don't know what a Bloomberg terminal is, guys, well, every time you see some stock market movie, you see that when they're on the stock exchange, you see those computers they're pressing with the yellow and green and blue buttons. That's called a Bloomberg terminal. That terminal costs $315 or $1,000,000, or sorry, $315,000 just to buy one, and then it costs $31,000 a month just to operate it. You have to buy a subscription for $31,000 a month. That's the amount of money these guys are making. Where $31,000 is just the renter's fee for the thing. Anyways, and a little inside knowledge for you guys. But this index now, and so that why I mentioned that is just listen. It means we're going into full adoption here, and I'm going to read an article for you in a minute, which will show that. The index aims to provide benchmarking of cryptocurrency assets for investors to use in a transparent fashion. It is currently comprised of the top 10 cryptocurrencies by the overall market cap, even though Novogratz clarified that other currencies might be included based on liquidity and the overall state of the market. The whole crypto revolution comes out of a breakdown in trust in institutions, he says. He explained how the aftermath of the recession caused the explosion of cryptocurrencies and digital assets. He spoke about the adoption of blockchain by corporates, giving an example of Microsoft's system. He said, it'd be shocking if every corporate treasury in 5 to 10 years doesn't have a blockchain treasury. You're cutting out lots of people and you're cutting out a lot of mistakes. Absolutely. 5, 10 years, you're just going to have, your corporation's just going to have your IT guys, you're going to have your regular IT guys, for your networks and your websites and that. Then you have your blockchain crew. That's going to be just standard procedure. When asked, and that's why we were talking about this, because it's cryptocurrency and blockchain news, right? So when asked about whether Bitcoin will reach the high seen in January of this year, Novogratz said that he believed that it would. He said that it depends on the custody solutions for these digital assets, namely wallet services and private key storage solutions, and that's what I'm talking about. These corporations want to come in. These hedge funds want to come in. These flipping all manner of fund managers want to come in. But where do they keep their stuff? That's what they want to know. You're not, Ford isn't going to buy, 10,000 Bitcoin and keep them on a Ledger Nano somewhere, in their corporate headquarters, So they want companies to come in, and that's their job, like just storing people's coins, warehousing their coins, as my buddy calls it, warehousing. So they want them to be warehoused. And so once that happens, though, once these institutions come out, once companies come out that are guaranteeing to warehouse your stuff safely, institutional investors are on the way. When institutional investors come, well, we've talked about this before on this channel. Not that many people watch this, so I'll say it again. Our holdings will rise. Your holdings now, it's just regular people like us buying this stuff right now, right? Once gazillionaires come in, whole funds come in with gazillions of dollars from other people, our holdings are going to rise nicely. All right, so he stated that until institutional names come into the market as custodians, Bitcoin would not reach its previous highs. Exactly. The big money's waiting. You know, they want it safe. They want it regulated. They want to know that there's custodianship. Their money is right, is going to be safe wherever they put it. No hacking, none of that. And then they'll come in. So I give this about a year and a half, 2 years max. By 2020, this will all be sorted out. And actually, this guy says sometime within the next 3 to 12 months, big announcements will happen saying we'll custody this stuff. So there's already, like I said, like if I know about custody problems, believe me, big money already knows. And there's already some people out there building companies to do just that, to guarantee custodianship of institutional investors' cryptocurrency purchases. So the market's rising. That's more of a boost story, okay? And so last story, guys. We've got a bright future for adoption. Oh, and we do. And this corresponds with the last story. So they need custody solutions. But why would you need custody solutions? That's because you know that the U.S. government has given you a thumbs up in that, hey, guys, just keep it all straight, keep it on the up and up, and you're good to go with your crypto. And that's what's happening here in America. If you're here in America, we are good to go. So, bright future for adoption. U.S. Congress releases a bullish report on blockchain. Bullish. Now, is it necessarily cryptocurrencies, tokenized blockchains? Not necessarily, but the whole blockchain thing in general, technology in general, they're loving it. America's loving it. And so, let's check it out. The Joint Economic Committee Congress of the United States has released its annual report on the economy and the market. Chapter 9, titled Building a Secure Future, One Blockchain at a Time. They literally named a whole chapter after blockchain. One blockchain at a time looks into blockchain as a potential tool for securing America's digital infrastructure. Of course, can't hack it. Can't lie to it. Please. Right? Here in America, I don't know where you guys are listening from, but here in America, they're talking about the Russians like hacked us and all this stuff and did this stuff for our elections to get this fucking guy in. Well, they won't be able to do that anymore. I mean, who the hell do they think they are? We're America, buddy. You don't hack us. I know it sounded a little arrogant, but seriously. Anyways, beginning by emphasizing the need to ensure the security of infrastructure, the report talks about the invulnerability of blockchain to cyber attacks and its disruptive power in commerce. Rest, disruptive technologies, everything's going to change. They compared the hype around cryptocurrencies to the buzz around internet excitement in the late 90s. Now, like I've said before, and I'll say it again, dudes, I'm 44. I'm not a kid. I was alive when the 90s were, obviously, when the 90s were around. And I was alive for that internet bubble when it happened. Everybody's dads investing in, Microsoft and, Cisco and, companies that aren't even there anymore, pets.com and what was that other one? The browser, Netscape and stuff, but they were making mad loot, but they didn't know what the hell they were doing. I was just in college then. Well, university. I didn't go to college. We have universities in Canada. And, so I wasn't able to participate, but everyone's dads were high-fiving each other every barbecue you had in the summer, like, oh, I'm rich. Oh, I've invested, in this thing called Microsoft. They didn't even know what they were investing in, right? We'd make fun of them, like, we'd, have a bite of steak and, like, be like, hey, Mr. Johnson, what does Cisco do? They wouldn't even know what they did, right? I don't know. It's some sort of server thing, but we're making money. Right? And we'd be like, well, what's a server, sir? And, and anyway, they wouldn't know, but that's the level we're at right now, right? We're the ones invested now. And then ask anyone around you, like, what's a distributed ledger or anything? They're like, they don't flip it know. But it's the boom. In other words, at that time, you almost couldn't go wrong. I mean, many companies are gone now, so you had to invest wisely. But if you got in and out real quick, you made just cash. You just made sick loot. All right, so let's continue with this. Anyway, so yeah, that was my experience as a youth, I guess you call that, right, in college. And so that's what we're going through right now. We're going through another revolution. This is the Internet 2.0 revolution. And look, I tell my buddies around here, look, guys, this crypto stuff, we're going to have our first $1 trillion company. You better believe it, $1 trillion company. I said it, $1 trillion company. Every technology that comes out far surpasses the last. And the market caps on those companies are way huger than the last set, right? Like, look at the market cap of, say, Facebook, and look at Microsoft. Microsoft, the god of computers, right? They own 85% of every computer on Earth runs Windows. 85%. But look at Facebook, right? Just the next technology comes and has a bigger market cap. And this blockchain stuff, boom, it's going to have even bigger market cap. I think Facebook's at what, 600 and change billion right now? I'm telling you, first $1 trillion company. Remember I said that. First $1 trillion company is going to be companies. Exactly. Did you say ease? Yes, companies are going to come out of this cryptocurrency blockchain world. All right, so let's finish up. So this guy said many internet companies launched and their valuations took off in short order. Many failed, but a few succeeded spectacularly and challenged the conventional ways of doing business. And that's the internet you live in now. When I was a kid, there was no internet. You know, I'd actually play outside with my friends. You know what I mean? You didn't. Now you're just sitting around Facebook and, hey, what's my friend saying? What my friend saying? You know what I mean? Or whatever. But see how life changes drastically, quickly, because we're in the digital era. This whole thing is the internet revolution. We're in a blockchain revolution. But what this is really called in terms of economics is the digital age. We're in the digital age where everything, what is that thing? Every 18 months, everything doubles in terms of the technology and everything. And that's what we're in. You're in the digital age. And this is a part of it called the blockchain revolution. All right, let's get this over with. After explaining blockchain and cryptocurrencies, they spoke about the limitations of Bitcoin for use as a currency, citing low transaction fees and high costs as limitations for everyday use. They also brought up the volatility of price, saying, for real. For example, the price of pizza could move from a fraction of a Bitcoin to thousands of them in a short time. That's quite an exaggeration, but seriously, if I buy a flippin' Starbucks coffee, I don't know, for $4, and then all of a sudden I look at my Bitcoin just went up like $1,000. Like, that coffee really just cost me like $10 or something, right? You know, volatility, guys, volatility. It's good in the Forex world, not so good when you're just trying to buy a coffee. Mention of healthcare companies using blockchain to store records digitally was also a big issue. Applications ranging from management. Whoa, that shit. Applications ranging from management of the electrical grid and utilities to how companies manage global supply chains. The potential for blockchain is truly revolutionary. And that's it. That's our government, the American government, taking a hold and saying, yes, this is revolutionary. All other governments are going to have to fall in line. The revolution continues. Wallets being hacked and vulnerable to theft were also addressed, they said. No evidence exists of anyone hacking blockchain's underlying protocol, but digital currencies are still vulnerable to theft. And that's the key. No one's ever hacked Bitcoin and stole money. No one's ever hacked Ethereum and stole money. They hacked blah, blah, blah. Mt. Gox and stole the money. They hacked blah, blah, blah. That exchange and stole money. But they didn't hack the underlying blockchain itself. Unhackable. Can't do it. And obviously they gave a set of recommendations. And they also said government agencies at all levels should consider and examine new uses for this technology that could make the government more efficient in performing its functions. Absolutely. We're going to streamline this puppy. We're going to put blockchain everywhere. And it's off to the future. So, guys, as usual, like I said, you want to know who I am? Go to forexfactory.com, type in my name in the search, SHOMARI. You can see I'm a trader and investor. Also, please subscribe. The little button that's going to pop up. It's going to have the little logo of all the nodes. Tell your friends, tell your family. Stay strong and hodl. So, it's been fun doing this once again for you. We'll see you next time.